Good afternoon, folks, and I have one question for you. Are you ready for some football? You know that one? It's not that. It's not the good theme, unfortunately. It's not the best theme for football, but baby, it's football day. We're back, and I hope you're ready. But first, we got to talk about Chewy's earnings, right? Definitely important stuff. Earnings report I was looking forward to quite a bit, so it's down a little bit after hours. Was down 3% of the normal trading session as well. So let's take a look at these earnings, right? Chewy is a very interesting company, obviously very poised for success in the current market. So, quarter two, GAAP EPS of negative 8 cents beats by 9 cents, so an unprofitable quarter, but it was expected. And to see a beat by 9 cents is pretty beautiful. Revenue, this is the beautiful number here, 1.7 billion, beats by 60 million, up 47.8% year over year. Now, here's the deal. You will understand that I told you to expect these earnings, expect the revenue to climb 50% year over year as opposed to the 45% estimate. And I'm really sorry. I'm really sorry I lied to you. I wasn't right, and I shouldn't have done that. Net sales per active customer of $356 versus a consensus of $365. An adjusted EBITDA margin of 9.9% versus a negative 0.9% consensus. Okay. Pretty nice. Quarter two adjusted EBITDA was up 153% year over year to 15.5 million. So from a non-GAAP perspective, they did post a profitable quarter versus what they did last year, which is nice. Very nice to see that. Active customers grew to 16.6 million, and net sales per active customer fell. But again, that's not unexpected when you rise the customer base. Occasionally, you'll get the people who are only going to really purchase a few items using Chewy, and it's not going to, they're not going to have a large family of pets necessarily to where they have to buy a lot of goods regularly. So, again, could be that. Or they might just be getting one item off of Chewy on an annual basis. So, just saying. So Chewy expects revenue of 6.75 billion to 6.85 versus a guidance of 6.5 to 6.65. So way over guidance and consensus for what they're expecting here for the full year, which is pretty nice. Yeah, it is nice to see that we also have lovely, small actually. It's a tiny little press release here. It's tiny. It's a little tiny. Not like I haven't heard that one before. Net loss of 32.8 million. Needs to be mentioned. Definitely a decent bit of loss there, but it's not awful. Hear from their CEO, Sumit Sin. That's how the name's said. Chewy's advantageous positioning in the pets industry, race towards e-commerce, our culture of innovation, and our singular focus on customer experience resulted in another quarter of outperformance. Of course it did. Good job by them, really good job. And to be honest, this is what I would call a press release that's a absolute bummer. Look at this. There's nothing on here. There's freaking nothing. Where's the data we want to see? There's nothing good. You almost have to turn to the shareholder letter, baby. This is a shareholder letter. This is what we're talking about. There's good stuff. We're scrolling up, obviously. Dear shareholder, we screwed you over on the press release, and we're excited to talk to you during this shareholder letter, I guess. Second quarter auto ship customers were $1.16 billion. That's right. Auto ship being the program in which it regularly sends you the same product. Obviously, if it's a pet meds, if it's pet food, it regularly will automatically ship it whenever you set that time frame for. Whenever you need it, they'll automatically ship it, and you'll pay for it, obviously, naturally. But it's an automatic process, so that is a pretty good. That's what's really cool about this company. That's what I think is definitely key for that. But you see net loss improved from 82.9 million to 32.8, so it is a good improvement in net loss. And you see overall the growth here in terms of loss. You see, well, it's weird to say that, the shrinkage in loss, the improvement in terms of that bottom line. We love to see that. And free cash flow, not a good quarter for free cash flow, baby. But we had to check that balance sheet out, because it's just a thing that we owe to ourselves. So overall, we look from a current assets perspective. This is a 6 months ending comparison. Total current assets of 730 million versus 629. My guess is they probably increased the cash position, and you'll likely see an increase in liabilities. I hope it's not the case, but total assets in general of 1.14 versus billion, I should say, versus 932 million. Improvement there, but liabilities as a whole is at 1.5 versus 1.3 prior. And again, the balance sheet did grow, right? Overall, you see an improvement in the stockholder deficit, and I mentioned deficit. That's what I don't like about this company. You're still a negative earner, and you're showing improvement, but it's not rapid enough improvement for me if we're talking about it from a full year perspective. And this is a company that's got a balance sheet where they're posting a negative $377 million mark, yet they still lost $38 million this quarter. That's what I don't like about this, and I think it'll devalue the stock in the long run, no doubt. So that's what I don't like about this. I really, really, really like the company. I really like the company. I cannot consider buying it when it's, valued at $24 billion, when it might bring in $6 billion this quarter or this year. Again, I just can't justify the purchase at these levels with a balance sheet like that. I'm not saying the company's going down. I'm not saying that, but from a value perspective, I don't like it. That's what I got for you on Chewy, and I really hope you enjoy it.